Hey everybody, so I recently posted a video where one of my traders blew up and I wanted to take out the last 10 minutes of that video and just repost just that portion. I think there's tons of value, specifically when I'm talking about that diagram with the emojis. And I don't want people to miss that because it's crucially important psychologically for every trader and investor to understand all the variables that go into blocking our ability to be objective at the markets. Also, if you're like me and I see a 22-minute YouTube video, I think, so hopefully this 10 minutes is a little more palpable and you guys get tons of value. I look forward to seeing you on the next one. Let's roll the tape. Thanks. Hi, I'm Christoph Marzek. I've been a professional trader and investor for nearly 2 decades, and I'm on a mission to help you make better trading and investing decisions to ultimately better your life. I drew this up where someone's ability to be objective in the markets tends to be dictated by how much they're onsides or offsides, okay? And these lines, I know this is very crude, but I like my Microsoft Paint. So this line here represents one's break-even P&L, all right? When you're making money, when you're on the plus side, you're able to remain objective, typically. It's a little bit easier. Notice the scale is much higher on the green versus the green below when you're losing money, all right? Typically, you can remain objective. Now, there comes a breaking point where one makes too much money and they become less objective, and ultimately where they're just through the roof ecstatic and they've just completely lost touch. And if your job as a trader is to be objective, your job of a trader is to stare at the markets in as much of objectivity perspective as you possibly can, an objective perspective as you possibly can. You have to be self-aware of this. And these lines change based on the person. Some people have this green bar way up higher and their yellow line is tiny and their red line is tiny. It also depends. So that's intra-person, the person themselves, it fluctuates. How much sleep did you get? What have you been thinking about? Your diet, your exercise, your real world environment. Where are you coming from? How much capital you have? How much capital you're allocating to this? All of these variables matter on where these lines are, okay? And this is what's making you make or break your objectivity of the market. Now let's look at the downside. It's a little bit tighter, okay? We are tighter to the downside where you can stay objective for a certain amount of loss, but very quickly you become a little bit more blinded and ultimately very blinded. And in his situation, couldn't even look at it anymore. I mean, when I called him when he was down 140, he wasn't even at the screens. He completely burrowed himself in complete denial, hoping for it to return. And ultimately, he ended up puking. Okay? So this chart, and you guys can take a screenshot of that, is something to be aware of. If your goal is to be objective at looking at the markets, this chart matters. Where are your lines? Okay, you could plot some numbers in here. Well, here's a hint, by the way. I forgot to mention this. If you're finding yourself up, let's say you're here, and you're finding yourself looking at your P&L more than the market, you're entering yellow red zone. You're not thinking. And this is dangerous, by the way, because the market will come back and get you. I'm going to use a term pretty often in some of my videos called neutralize. You have to neutralize yourself daily. Also, the reason why I like short-term trading, because you have the capability of doing so. There's breaks, daily breaks, where then you can go and do what you need to do to neutralize. I exercise, I go outside, I go to nature, I spend time with my family. I have my own neutralizing, okay? I'm a little bit spiritual. I do all those things to help me neutralize, so I can reset the next day back to, all right, I'm always green. I'm always going to try to be green. The times I blew up, besides my early career, the times I blew up is where I wasn't green. I wasn't neutralized. I was tired, whatever. I had lots of variables. You're going to figure that out. All right, so what are the trading takeaways of this situation, of what happened here? Be mindful of your reasons to enter a trade. Are they backed by a sound strategy? Okay. Averaging in, dictated by one's own P&L is not sound. If you're like, I need to get that break-even point closer, that's not a reason to go in. You're thinking already personally. The market does not care about your P&L. Remember this. The market does not care about your P&L. Okay? You have to care about the market, and in the back of your head, keep your P&L. I'd say all noobs Should be very sketch and averaging in. It's just a doomsday scenario right waiting to happen. Some of you might even relate to some of this. He failed to remember a very important risk management mindset. This is what it is. It can get worse. This is difficult. This is pro level stuff here. To be able to be in this area, okay, to be able to be way down here and still be a green bar, still be in neutral, objective territory, takes time, effort, all the things that you need that a professional trader has. Very few people can do it, but those that can are the ones who are telling themselves, this can get worse. When he was down 3, when he was down 10, think about this. When he was down 15 very quickly, his reaction was not, it can get worse. It was hoping it can get better. All right? It was hoping it can get better. And ultimately, that ended up destroying him. And by the way, I should mention, ultimately, that killed his seat at the table. That's everything about blowing up. Oh, gosh, it's so detrimental psychologically, obviously financially, but psychologically, and also potentially your ability to capture the next edge. This is huge. If you blow up, and blow up could also, again, be defined as just a large loss. Large losses can be detrimental because you're going to miss the next good trade. You're going to miss the next good trade that comes up. And it can come up tomorrow, next week, next month, next year, whatever. You got to keep your seat hot. Okay? Know where your green, yellow, red zones are. The one from the diagram, okay? Maybe that means the percent of capital starts to get to you. Maybe you start looking at your P&L too much. Maybe you're doing the trader math. If I only can do this every single day for 249 trading days, I'm good, bro. I'm good. Be careful once you start saying that. You talk to your spouse, your girlfriend, boyfriend, whoever. You talk about how you're on a streak. Be careful. When your chest is puffy, when you're like Gorilla Norman, be careful. The market will find that. The market will find that. When the tide recedes, it will find who's swimming naked, as they say. You have to humble yourself that you may be wrong. And let's define when that means, by the way. And I'm going to talk about this in other videos. When one is wrong can either be financial. I lost $2,000. I'm wrong. Okay, I don't totally love that philosophy, but it's a good way to at least put the sand, the stick in the sand. Or what I prefer, and I'm going to spend time talking about this in our videos, the expectation of a trade. Is the trade behaving the way you expect it? If all of his 20 winning days he was on sides within 4 minutes, I like to use time in my trading. If all of his winning days was, if I'm on sides in 4 minutes, it's a win. That day where he's off sides in 8 minutes, you shouldn't be averaging in. You should be scaling down. That's what that means. How does one expect a trade to perform? You have to trade to learn, trade to fail, trade to succeed, take notes, do research. Have a mentor. I should have more things in here. Mentorship is important. You need to have somebody objective. The ultimate big takeaway, your goal as a trader is objectively looking at the markets, viewing the markets without 200,000 years of evolutionary gunk. You're a human that's battling 200,000 years of evolution against stress, survival, etc. And that comes up in your perception of the markets, okay? Time becomes different under stress. He said it went in a flash. It wasn't a flash. I looked at the data, right? It was about a minute. Could he have gotten out? Absolutely. Absolutely. I've seen a flash trade where it's like instant. But could he have gotten out? He could have. Memory becomes weird. Distorted. I remember talking to him. It's like he couldn't even quite piece it together. I had to look at his trades carefully and like, dude, like what were you doing? Doesn't remember. It's only he was in that purple, completely not objective. And why? Because he's battling human. All of us have this, by the way. I'm not any different. I'm not anything special here. Which is why I believe, by the way, because I don't think I'm that special when it comes to figuring this out, I believe you can figure it out. I think any single human being can be a good trader, including you. Okay? All right, the final summary. Why am I sharing this story with you? Okay, I want you to know and realize that this is real. Okay, this is real. This is a real trade that happened. He lost his account balance. I took a hit. And just like Norman the gorilla said, learn from others' mistakes. Finally, I want to leave you with this. Every loss holds a seed of equal or greater value. Don't waste your losses. This was a loss to me, and I'm not going to waste it because I want to share it with you. That's really what I'm hoping for. I'm hoping that this saves all of you some sort of money. Next time you're in a trade, you're like, oh yeah, I remember that video. Guy lost 160,000 bucks. Not going to forget that. That's my hope. My hope for you. I hope you got a lot of value for this one. Sorry, it's a little more somber. I will have green trading days and green stories also. So stay tuned for those. But I also hope you have a great day, and I'll see you in the next one. Thanks.